Let's start off with a lot of analysts and investors didn't revise their expectations when it comes to projected U.S. economic growth. Their thinking is that the shutdown has a limited or had a limited impact on the U.S. economy. Would you tend to agree with that?
Yeah, I mean, if it had gone on, then it would have become a bigger deal. And it probably, I don't know if it'll show in the numbers, probably, but it's, it was almost like a stretch of bad weather in terms of its actual impact, and it'll have some passing impact unless we go back into it. Now, what it'll do in the longer run to the credibility of U.S. policy, that's been eroding on various fronts for a while, and so I don't expect the shutdown is going to be a big part of the story we'll be telling, over the next few months.
Let's talk about the Fed a little bit. A U-turn in terms of the signaling from their end. How surprised were you by that, and what does that mean for the trajectory of the Fed 2019 and beyond?
I wasn't really surprised. Maybe the actual way it played out was a little bit more abrupt than I would have expected to see. But the fact of the matter was that the Fed's normalization of rates was never really very grounded in the data. It was always, well, we need to do this to head off inflation rising above target, but where was the inflation? And so it finally just became clear that there wasn't enough inflation, there wasn't enough of an inflation signal in there to justify, and that meanwhile you have some likely headwinds facing the economy, so continuing to raise rates was really looking like a bad idea.
Is it possible that they could switch to cutting rates?
Of course.
Yeah. I mean, is that the more likely option? Because you say that there are quite a few headwinds. I mean, trade would be one of them.
Yeah, I mean, if suppose that there's a trade, Europe is looking really problematic. There'll be some blowback to the U.S. if that is really going bad. China seems to be having a slowdown for reasons that, again, have nothing to do with U.S. policy, but that blows back to the U.S. So if we have a deteriorating environment, it's quite possible that the Fed will end up cutting rates.
We've surveyed CFOs in the United States, and an overwhelming majority believe that a recession is going to happen within the next 2 years. Is that something that you see as well?
I wouldn't be as definitive, but it seems pretty likely. There seems to be an accumulation of smaller problems, and then the underlying backdrop is that we have no good policy response. The Fed can't cut rates very much. Fiscal policy, there is a fact fiscal space if we were prepared to use it, but it's hard to see that this current leadership is going to respond in any kind of nimble way. So yeah, I'd say that it's better than even odds that we will have a recession.
I mean, when you look back to the last crisis and you compare it to the possibility of a crisis now, is the U.S. and the world in better shape to withstand a crisis?
Oh no, we're clearly in worse shape. I mean, we came into the last crisis with interest rates clearly above zero. And lots of room for interest rate cuts, not enough, but lots of room for interest rate cuts. We came into the last crisis with public debt substantially lower than it is now, which I don't think is a big factor objectively, but it's a psychological factor. And then we came into the last crisis with pretty remarkable leadership. I mean, don't want to especially, I do actually enjoy maligning government officials, but look, let's put it this way, our current Treasury Secretary is no Hank Paulson. So I think we're in much worse shape. Now, we probably don't have a crisis of that magnitude about to hit us, God help us if we do, but we're much worse shape to deal with whatever shocks do come along than we were 10 years ago.
You've had a chance to see the recent IMF report. They downgraded their expectations for global economic growth. What is the biggest risk facing the global economy from where you're sitting?
I actually see two. I'm not sure which is the biggest one. And one of them is China. I'm in the camp that's been predicting a Chinese crisis over basically inadequate consumption for a long time, and it keeps not happening, but it does seem to be finally getting closer to that point. And the other is Europe. The euro area is clearly experiencing a slowdown, pretty close to recessionary levels already, and has no recourse, right? Draghi can't cut rates because they're actually negative already. There's plenty of room for fiscal expansion, but it's room basically in Germany, and Germany is Germany, and they won't do it. So I think Europe is actually a danger spot that's potentially as big a deal as China.
I'd love for you to weigh in on where this U.S. trade standoff with China is going to go. Is it only going to go away if Donald Trump, U.S. President Donald Trump, gets defeated in 2020, could it get that protracted?
Yeah, I mean, the odd thing about the U.S., the trade conflict is it's really, making predictions is hard because we're really about the mind of one man. There is no broad constituency. There is no deep-rooted protectionist movement in the U.S. It's all just Trump. He wants it. Even his party doesn't want it. Even the voters who voted for him don't really want it. So it's all about him.